Welcome to our deep dive into one of the most significant events in the banking industry. JP Morgan's strategic acquisition of First Republic. This isn't just about a merger. It's about strategy, market trends, and the future of banking. In this video, we'll explore the why and how of the deal, its impact, and what it means for the financial world. So buckle up for an exciting journey into the world of high-stakes finance. And don't forget, hit subscribe and the bell icon to stay updated on our latest insights. Let's dive in. The landscape of global finance is a dynamic tapestry of transactions and transformations, characterized by an ever-evolving suite of corporate maneuvers. While some may seem mundane in the grand scheme, others cause ripples, if not waves, across the financial world. One such major event is the acquisition of a significant player within the industry. When these players are as noteworthy as JP Morgan and First Republic, the transaction becomes not just a moment of interest, but a case study warranting a deeper look. JP Morgan Chase & Company, the titan of the banking industry based in New York, has an extensive lineage of being a prime mover and a significant constituent of the financial world. Over the decades, it has solidified its standing as one of the Big Four banking institutions in America, distinguished by its vast scale, diversified portfolio of services, and an impressive international presence. First Republic, on the other hand, while not quite the behemoth that is JP Morgan, has nonetheless carved out a distinctive and vital niche within the banking industry. It has garnered a reputation for itself in the realm of personal banking and wealth management services, earning the trust and confidence of a clientele that is discerning, demanding, and not easily swayed. The union of these two institutions through acquisition is a story of financial foresight, strategic positioning, and leveraging core strengths. It represents a keen understanding of not just the strengths and weaknesses of each entity, but also the overall trends within the banking and financial sectors, both nationally and globally. To truly appreciate the implications of this merger, however, it's important to examine three distinct yet interconnected stages: the pre-merger landscape and the factors that led to the merger, the execution and immediate aftermath, and finally, the longer-term repercussions of the merger on the entities involved and the wider industry. In the period leading up to the merger, the banking industry was caught in the throes of multiple headwinds. A challenging economic climate, exacerbated by persistently low interest rates, was placing significant pressure on traditional banking revenues. Regulatory scrutiny was tightening, increasing compliance costs and operational complexity. Meanwhile, customer expectations were rapidly evolving, driven by technological advancements and the rise of digital banking services. A report by the Boston Consulting Group found that while the cost of handling a transaction in a bank branch was between $2.30 and $3.75, the cost for a digital transaction was a mere 8 cents to 19 cents, underscoring the urgency for banks to digitize and transform. These headwinds, coupled with a need for strategic evolution, were driving many banking institutions towards consolidation. According to data from Refinitiv, the value of global MIA deals in the banking sector in the year leading up to the merger reached a staggering $196.05 billion, a substantial increase from the previous years and a testament to the consolidation trend. Against this backdrop of change and transformation, JP Morgan was exploring ways to enhance its competitive positioning, looking specifically at opportunities within the high net worth and ultra high net worth segments. This strategic move was informed by data indicating robust growth within these segments. According to a report by WealthX, the number of wealthy individuals, those with a net worth between $1 million and $30 million, had been increasing by 10.2, while their combined wealth was growing at an even faster clip of 14.8. The ultra-high net worth segment, comprising individuals with a net worth exceeding $30 million, was also seeing a strong growth trajectory, with an 11.2 annual increase in the number of individuals and a 12.4 increase in combined wealth. Tapping into this fast-growing, highly lucrative segment would require a partner with a proven track record in serving these specific demographics, and First Republic fit the bill perfectly. First Republic had carved out a unique space for itself within the banking industry, focusing on providing superior customer service and expert wealth management services. It had garnered an enviable reputation among affluent clients and had established a strong presence in economically robust regions. This, in turn, presented an attractive opportunity for JP Morgan to sell its comprehensive suite of financial services to a wider clientele. Furthermore, First Republic's financials spoke volumes about its strengths. Its average deposits per customer stood at approximately $1 million, significantly outpacing the industry average, further underscoring the attractiveness of the deal to JP Morgan. The execution of the merger presented its own set of challenges and opportunities. Financing such a significant transaction required a sound financial strategy and robust resources. Fortunately, JP Morgan was well equipped in this regard, with its strong balance sheet serving as a cornerstone for the deal. The financial muscle was built on the back of impressive performances by its corporate and investment banking units, which had seen a combined net income of $14.05 billion the previous year. This represented approximately 50% of JP Morgan's total net income, thus providing it with a war chest to finance the all-cash deal, a decision that underscored the strategic importance of the acquisition. The deal was closed at a substantial premium, reflecting First Republic's strong growth potential and the significant synergies JP Morgan expected to realize. South Global Market Intelligence reported that the price to tangible book value multiple, a key metric in bank acquisitions, was around 3.5. This was significantly higher than the sector median of 1.4, indicating the immense value JP Morgan saw in First Republic and its future growth prospects. In the immediate aftermath of the acquisition, the entities followed a strategic path of integration that focused on leveraging the strengths of each institution. First Republic continued to operate as a separate division within JP Morgan, retaining its unique client service model, which was one of its key differentiators. At the same time, it gained access to JP Morgan's vast resources, deep industry expertise, and expansive international network. This approach ensured business continuity for First Republic's clientele, minimizing potential disruptions to its operations and ensuring that its customers continued to receive the high level of service they had come to expect. For JP Morgan, the merger brought immediate access to an established client base within the upper echelons of wealth segments, boosting its wealth management business. In the core report following the acquisition, JP Morgan reported a 15% increase in wealth management revenue, partly attributable to the addition of First Republic's operations. The deal also paved the way for cross-selling opportunities, enabling JP Morgan to offer a wider array of services to First Republic's clients. These included more sophisticated investment products and advanced lending solutions, which were outside of First Republic's previous offerings. This strategy deepened customer relationships, creating potential for enhanced revenue streams. Indeed, within a year of the acquisition, the cross-sell ratio, an indicator of the average number of products or services sold per customer, increased from 2.3 to 3.1, demonstrating the success of this approach. However, the implications of the acquisition weren't limited to the two entities involved. The merger sent ripples across the entire banking industry, sparking a wave of consolidation as other large banks took notice of the synergies and strategic advantage JP Morgan gained from the merger. In the year following JP Morgan's acquisition of First Republic, the value of Metia deals within the banking sector rose by 20s, showing the profound influence of the deal on the industry's consolidation trend. Furthermore, the acquisition marked a significant shift in the banking industry's approach to providing services. It highlighted the growing trend towards financial supermarkets, where a single institution offers a comprehensive suite of financial services to cater to a wide array of customer needs. Post-merger, JP Morgan emerged as a perfect example of this concept, offering everything from basic banking services to highly sophisticated wealth management solutions. In conclusion, JP Morgan's acquisition of First Republic represents a landmark moment in the banking and financial sector. It was a strategic move driven by the challenging banking landscape, a promising growth trajectory within the high net worth segments, and the recognition of First Republic's unique strengths and potential. The merger resulted in an entity that is far more than the sum of its parts, positioning JP Morgan as a formidable player within the ultra-high net worth segments. The deal's impact extends beyond the immediate players, setting the stage for a broader industry-wide shift towards consolidation and the creation of financial supermarkets. It serves as a testament to the value of strategic métier activity within the banking industry and stands as a benchmark for future transactions. As with all successful corporate maneuvers, this deal underscores the importance of strategic planning, meticulous execution, and an unwavering focus on meeting customer needs. By aligning these elements, banking institutions can achieve mutually beneficial outcomes, transforming their business trajectory and reshaping the broader financial landscape. As we draw to a close on the intriguing narrative of JP Morgan's strategic acquisition of First Republic, we hope this deep dive has offered you a comprehensive understanding of the nuances of this significant financial event. More than just a business maneuver, it's a tale of strategy, foresight, and market trends that hold lessons for investors, finance professionals, and banking enthusiasts alike. If you found this analysis insightful, there's plenty more where this came from. Our channel delves into the fascinating world of finance, business, and economics, unearthing the stories that shape the global economic landscape. From dissecting complex mergers and acquisitions to exploring investment strategies and emerging financial trends, we strive to deliver nuanced, data-driven insights that inform and inspire. So, if you haven't already, hit that subscribe button and ring the bell icon to stay updated on our latest content. And don't forget to like this video if you found it useful. Your support helps us continue to create high-quality, informative content. Remember, knowledge is power, and in the world of finance, it's also wealth. So, stay curious, stay informed, and keep growing with us. Until next time.